Hi everyone, my name is Hani Somjini and welcome back to my channel. Today I'm going to be discussing tips you can use to actually reduce your tax liability. I'm going to be discussing 10 tips you can use. Now the first tip that you can use to keeping track of your business expenses, especially if you're a freelancer or a commission earner or you are a sole trader, it's very important that you keep track of these expenses because often at times, yes, the expenses will be there and they would have had happened, but then when it comes to proving to SARS, in terms of invoices and all those things, the person can't produce them, and in that way SARS then writes off those expenses. You have to make sure you keep track of them and actually go to the extent of keeping those invoices. That is very, very important because for each and every expense, SARS might even ask that you produce an invoice for it. So it's very important if you're a freelancer or a sole trader or a commission earner, do keep track of those expenses. Expenses such as stationery, your employee expenses, keep track of those and all those things. It's very important. Now, the second one, you need to make sure you keep a logbook if you are driving a company car. The reason for that is because driving that company car SARS looks at that as a fringe benefit, because when you drive a company car, you actually normally you will take it home with you as well. You will do things for yourself when you're driving that company car. So it's very important to keep a logbook where you are recording all your business as well as personal expenses. In that way, when it comes to SARS actually taxing you on that fringe benefit of having this company car, you are able to say to SARS, but here I'm producing a logbook, 90% or say for instance 99% of that usage of the company car was actually used for businesses and only just 1% was used for personal, and that can be used only by producing a logbook. So it's very important to keep track of a logbook. And also it is also very important to make sure that your logbook actually has all the details that SARS wants. SARS has their own logbook on their website, and I always just tell people just use the SARS logbook. And if you are using another logbook that actually tracks you driving around and all of that stuff, it's fine, but make sure that it's got all the details that SARS needs, because in the past year SARS has become so strict when it comes to the logbook. They will not just accept anything that's scribbled on and doesn't show any information. They want to know where you went, who you saw, and want to know where you went, what was the reason, if it is business, how long what it was, and all of those things. So just go to the SARS website, download the logbook, and make sure that you just keep yourself out of trouble. Just use their own logbook. In that way, you'll be happy, they'll be happy, and most importantly, you might get your refund. Again, if you get travel allowance from work, you need to keep a logbook. The reason for that, again, like I've explained before, when you getting travel allowance, 80% of that income gets included as a fringe benefit in your pay slip. So at the end of the period, in order to show SARS actually that no, I actually traveled for business 80%, and for me it was 20%. If you can be able to show SARS that it's the other way around, then you might even get a nice refund, which is what happens to most people that have logbooks and travel, that have company cars or that get travel allowance. They normally get refunds because they now show to SARS, because SARS has been deducting tax on that amount every month from you because they've been taking that amount as a fringe benefit, and then be deducting tax on it. Now they say when you produce to SARS a logbook to SARS saying that actually most of that was used for a business, and the only way you can do that is again a logbook. If you can show SARS that, then then you will most likely get a refund, or will not be in a position where you actually owe SARS money. So it's very important, again, those two things: company car, travel allowance. Keep a logbook, and if you can, use the SARS logbook. It's gonna make things simpler for you. Now the fourth tip, you need to see if you can't contribute towards a retirement fund. And the reason for that is because SARS is sort of encouraging people contributing to retirement funds. As a result, up to 350,000 Rand of that can be deducted from your income, obviously, depending on the amount that you've contributed. You can't deduct more than what you've contributed, obviously. So after 350,000 Rand can be deducted. Now, if you have a pension fund at work, it's fine. But if you still have some spare money that you can contribute towards retirement funding, then a retirement annuity is what you should be contributing towards. And that one doesn't have to do with your employer. You can just go to a financial advising institution, and then ask them if they can you can open a retirement annuity for you, and then you contribute towards that. Even that will help you to deduct to decrease your income tax liability. Now the fifth tip, if you're a commission earner, in other words, if in your RIP5 there's a code 3606, then you need to keep track of your business travel. The reason for this, if your commission is more than 50% of your total remuneration, in other words, say for instance, you earn 100,000 Rand a year and your commission is 60,000 Rand and your other remuneration is 40,000 Rand, then you are eligible to actually claim all your business travel from your commission income. So make sure that if you earn commission and you are not sure whether or not it will be 50% more than your other remuneration, keep a logbook anyway, just in case. If it happens that it is, then you will be able to claim for all your business travel. And most people who earn commission travel a lot because they're normally estate agents. So if you're an estate agent, keep that logbook. Keep it. You contribute towards a tax-free investment. Now, this one is actually a nice one because whatever earnings you get or remuneration you get from that tax-free investment, it's tax-free. So SARS will get none of it. This is also another way SARS is actually encouraging people to actually save. Now with this one, you must remember there's a threshold. In other words, in a year, or the last time I checked, it was 33,000. It might have increased, but then there's also a lifetime threshold, which is 500,000 Rand. I know that one hasn't changed. So make sure that when you're contributing towards these tax-free savings, you check if you have not gone above the threshold, because if you actually do go above the threshold, then there'll be penalties, and those penalties will actually reverse the whole point of you actually saving some money to begin with. So it's very important there is a threshold. In other words, there's an amount in which you can, 33,000 Rand, the last time I checked, that you can invest in a tax-free investment, the last time I checked, in a year. And then in your lifetime, it's 500,000 Rand that you can invest in a tax-free investment. So you need to check for those things. And I have found in the past it has happened. When you go to these financial advisor institutions, people don't check with you. In fact, it's not even their responsibility. But I mean, I would think if someone says they're a financial advisor, they would actually try and check if, okay, well, have you invested in any other tax-free investment before? And then if you say no, then obviously they do their business. But if you say yes, then they check how much did you put in. For instance, if you put in one 10,000 Rand, which means then if you go to another institution, you have 23,000 Rand now that's left for you to put in a tax-free investment in that year. The thing about this investment is called it's tax-free. So whatever money you make out of this is all yours. Whether you reinvest it or you withdraw it, it's still tax-free. The next tip that you can use in order to decrease your tax liability is to donate towards a SARS registered charity. When you donate towards a SARS registered charity, up to 10% of your taxable income can you deduct the donation that you made. In other words, say for instance, your taxable income is 100,000 Rand and your donation was 15,000 Rand. 10% of your 100,000 Rand is 10,000 Rand. That means of that donation you made, of that 15,000 Rand donation you made, 10,000 Rand you can deduct as a tax deduction on your returns. Now, with this one, in most cases, I've seen people donate. Nobody really donates up to that much of a taxable income. I've seen it. I've never had someone that has donated way too much, so they can't claim all of it. Most of the times, people what people donate, they can claim all of it. But I need to tell you that the threshold is up to 10% of your taxable income that you can claim. That's the nice thing about it. And also the nice thing about this donation is that if, for instance, the example that I just made, the person could only claim 10,000 Rand because it's 10% of their taxable income. But the 5,000 Rand you can actually move to the next year. So that's the nice thing about it. So in total, you can claim all of it, but obviously you can't claim all of it in 1 year. So donate to the SARS registered charity, which they call public benefit organizations. And if you want to know if an organization is registered for with SARS or not, then you go to their website again and click on PBOs, and you search if your PPO is registered. And also remember, when you are after you've done the donation, that public benefit organization or the charity that's registered with SARS needs to give you a certificate that proves that you've made the donation. One of the ways that you can actually decrease your tax liability is if you keep your expenses. If you get subsistence allowance, subsistence allowance is the allowance you get when you go work out of town, for instance, for meals, for toll gates, for travel, and all those things, for accommodation. Your company would pay you for all those things. Now that is included in your income as a fringe benefit, but as soon as you provide the receipts that you spend this money on your meals and all those things, those things can be deducted. And also SARS provides a guide on how much you can give someone for a meal for subsistence allowance, in order to avoid a situation whereby people are given exorbitant amounts in order to, and the amounts are called subsistence allowance. And there's a guide on the SARS website, and there's also a guide allowance for when you are abroad. Now, anything more than that, the guide that SARS has provided that you get for subsistence allowance will be taxed. In other words, if the guide says that for a meal you're supposed to be given 400 Rand and your company gives you 550 Rand, the 150 Rand will be taxed unless you provide a slip showing that you actually used that money for a meal. Okay. Now, the last tip that you can use in order to decrease your tax liability is to actually be part of a medical aid. Now, this one is not very popular because not everyone can afford to be part of a medical aid. But if you have a lot of medical expenses and you paid a lot towards medicine, and for instance, if there's someone in the family that has a disability, then if you can afford to then be part of a medical aid, because then you will get a lot of deductions from that, because there's what you call a medical deduction that you get from tax from SARS, depending on the amount of people that are there in your medical aid, that are registered in your medical aid. For instance, for a certain person, for each person that is in there, then the rebate is normally about 200 and something or 400 and something. I'm not sure, but then you need to make sure that if you can afford to, then you become part of medical aid, especially if you have someone that has a disability and that has a lot of expenses that have to be paid for medically. Also make sure that if you have medical expenses that you pay out of your pocket other than those from your medical aid, you keep, number one, the receipts or the invoices. Number two, you keep track of those as well, because it's very important. The more expenses you pay out of your pocket that the medical aid does not cover, the more deduction that you get from your tax return. So that's also very, very important. And for the person with a disability, if it's a permanent disability, then you can submit the same form to SARS saying that this person is permanently disabled. But then if it's a temporal disability, then once in a while the person will have to go to the doctor. SARS will tell you if they need a new form. In fact, I think there's something on the website that explains how often you need to go to the doctor to confirm the disability of that person if you have someone in your family that has a disability. And it has happened in the past a lot that people who have a temporal disability, they use the same form, and SARS doesn't recognize those deductions, because they say that you should have gone to the doctor again to actually confirm the disability, because it's a temporal disability. Okay, so those are all the tips you can use to decrease your tax liability. If any of these tips you're going to use, let me know in the comments. And don't if you are a small business or an individual and you would like to learn more about South African tax and want South African tax simplified for you, then this is the channel for you. Subscribe and hit the notification button, because I am dishing out all the goodies when it comes to tax. Okay.